I don't know, I'll just tell you a story. And the story is about how we started and I guess how we got to where we are today. So, I've been in the Philippines for 23 years, as has our co-founder, as Richard alluded to, Richard Eldridge. And about 10 years ago, Richard was running a BPO business here. And I remember him telling me, Mark, a lot of my staff, they're asking for salary loans. And, as British, it's very, very unusual. We couldn't quite understand why his postgraduate, educated, formally employed employees who were doing, hedge fund consolidation for Wall Street hedge funds were asking for loans until the end of the payment period. Because back home we wouldn't go and ask our boss for some money. So this piqued Richard's curiosity, and he hired some interns to go and do some research. And the interns came back and said, yes, I've got some slides here in the data. I think everyone's been through these data points today already as well, so I'm going to skip through these. There we go. We all know this. We all know about the financial inclusion problem. But one of the interesting data points in 2010 was that there was 1.2 billion emerging middle class consumers globally for whom there was no access to credit for the want of having a credit bureau score, but their level of digital penetration, their digital footprint was very significant already in 2010. For those of you old enough to remember, Facebook was already getting very popular. Smartphone penetration, certainly amongst the sort of college-educated, formally employed, was increasing. And we had a hypothesis that we could take one kind of behavioral data, which is the digital footprint, and predict another type of behavior. That type of behavior being repayment behavior. So, we went and saw some of the banks here, the usual suspects, the top banks, on Ayala Avenue and in Ortigas, and pitched our idea. These were very short discussions, asking the banks to put up the capital to lend so that we could build these algorithms using Facebook data. Really, really short meetings, I can tell you. So, undeterred, we applied for a lending license and we built our own online lending platform. I think we were the first to do paperless lending in the Philippines. We built our own core banking system. That was a major mistake. Never do that. And we dispersed our first loan March 2011. And we gave money away. We literally gave money away to get the repayment behavior to help us build the algorithm. So we asked our customers to give us access to some of their personal data, email, Facebook at the time, latterly smartphone data, and we gave them money, and then we used the repayment behavior to help build the algorithms to predict default. So we did this in the Philippines for a year, and then the models initially looked kind of promising. We could predict to some extent who would repay and who would not. So far, so good. We proved out our hypothesis with regards to some of the discussion this morning. We proved out the hypothesis that consumers for whom it is difficult to get access to formal credit will give up access to their personal data to get access to credit. And that was another one of our hypotheses. Everyone said, oh, no one will give you their email data. Well, actually, they did, without a great deal of concern, because we offered them convenient, affordable credit tomorrow, right? So we proved some of our hypotheses. We then realized we had to make this scalable. We had a social impact mission. To make this scalable, we had to try it somewhere else. So we looked at Vietnam, we looked at Indonesia, Then we went to Colombia. Colombia's a very interesting place, very far from the Philippines. So we set up a lending business in Colombia, much to the consternation of some of our investors. And then we opened up a lending business in Mexico. So very, very disparate markets. I was lending up to $5,000 in Mexico. Never saw much of it back, truthfully. Very difficult market. But over that three-year period, we learned a lot about the lending business. We built a lot of additional services, algorithms to do not just credit scoring, but things like verification. You know, operationally, the biggest challenge I had was verifying the customers. Anyone that's in the lending business here will appreciate that challenge. How do you verify the employer? How do you verify the income? How do you do it in real time? How do you do it at no cost? How do you detect fraud? So there were lots of other things that we realized we needed to build to facilitate this financial inclusion or financial wellness mission that we had. So after a 3-year period, our algorithms from a credit risk perspective became very predictive, significantly more predictive than the demographic models that the NBFIs were using. There was no frame of reference for banks because they were just using credit bureau scores. And we pivoted our business at that point to become a B2B business. Unlike the path that Mike has taken, you know, we had a vision to credit score 1 billion consumers globally. We couldn't do that as a lender. It just wasn't a viable prospect for us. We had to work with people already with lending licenses in markets globally to help realize our financial inclusion mission. Okay, let me just go back. So, you know, how do we do what we do? The image on the left in the Philippines, for anyone that wants to make a lending decision today, this is pretty much all you have. And frankly, like the likelihood of you having credit bureau data on an applicant is pretty slim as well. If you want to service the sort of emerging affluent, who are banks would tell us that after, and you know, for the NBFIs, maybe the informally employed, like you've got no bureau coverage there. So, you know, the ability to make a credit decision is very difficult. If you do want to service that market, it means it's going to be very expensive. Our idea was to use some of the data on the left side today. We are using smartphone data, very similar to the data that Mike was telling you about earlier. We have done a lot of work with email data, and we're really interested in what our data scientists would call metadata, behavioral data. We're not really interested in reading your emails, your messages to understand your lifestyle preferences. Rather, we're interested to know about your patterns of behavior and are they consistent with what we know is consistent with good repayment behavior. So you know, this type of data, the customer will give their consent. Very importantly, you know, we're not doing any scraping. We don't ask for anyone's passwords. There are global standards for how we get access to that data. Many of you will have used that technology yourselves when you sign up for a service. It says sign up with Google or sign up with your Facebook page. But you know, from a coverage perspective, it's not the whole story. And you know, we had a good deal of prospective clients who said, look, we want to service a demographic who don't have smartphones yet, still on USSD. We want to service a demographic that don't have email yet. And you know, over a period of time, you know, we were looking for some types of technology to use, and our global competitor, which was a spin-off from Harvard University called EFL, the Entrepreneurial Finance Lab, they had developed, kind of in parallel to Lenddo, the use of psychometric evaluations for doing credit scoring. So they started off doing credit scoring for micro business, micro SME. We were doing consumer We did digital, they did psychometric, and it seemed kind of sensible that we should get together, which we did last year, which is why we're now Lenddo EFL. And today we're using that psychometric evaluations in the Philippines for the new to card segment. We use it for micro SME in Vietnam and in Thailand and in Indonesia. All the time focusing on, not just basically focusing on solving the credit risk problem, but facilitating those decisions with our verification services and other types of models that we build. So today we're working for banks. It takes a long time. There is this integration process. It's a heavily regulated environment. Banks are inherently very risk averse, but we've made good progress, and we're working in many markets with the top banks, NBFIs we work with, and increasingly we start to discover new use cases for our technology. We're now working in the region with some innovative insurance companies. We're building models to predict propensity to claim, propensity for fraud, using the same kinds of non-traditional data, and really helping facilitate by helping our clients size the risk appropriately, the sort of financial wellness that Jackie was talking about a minute ago. It's not, financial inclusion is not just about making sure someone has a bank account, but how can they avail of the types of services that are going to be life improving for them and their families. So that's really the story that I've got to tell. I hope that was of some interest. I think it's great to be here to sort of come back to Richard's opening statements. We started here. We do consider ourselves at heart a Philippine startup, albeit we've kind of managed to spread our wings a little bit further. But it's good to be here and good to connect with some old familiar faces as well. Thank you very much.